Hello and welcome to Investing Confidential. Well, I hate to say I told you so, but I've been telling you, okay? Fitch finally getting the downgrade I predicted a month and a half ago. Fitch downgraded the U.S. credit rating from AAA down to AA plus. Look, guys, this was obvious, okay? And I already saw some news reports trying to politicize this, saying that, oh, it was because of the Congress threatening. No. Fitch, if you read the Fitch downgrade, okay, there are a number of factors, but the biggest factor is U.S. has a huge interest problem, okay? Now, I showed this the last video, I'm gonna show it again, okay? It is massive, okay? Here we look at the tax receipts, okay? All you need to do is say to yourself, okay, U.S. is not collecting taxes like they used to. Federal tax receipts are plummeting, okay? Our interest on our debt, remember, every time a bond comes due from the Obama era or the Trump era, okay, which was, we're talking about 1%, 80 basis points. Now you got to refinance that at 4%. 4%, okay? We're talking about a huge upgrade in interest payments, okay? And any rating agency worth their salt, and by the way, Moody's is the only one who hasn't downgraded the U.S., and Moody's is coming. I mean, it's too obvious not to. This is going to continue, okay? And this has always been the risk, right? We talked about, inflation and strong dollar, but in the end, it was always going to be the biggest risk to the stock market, the biggest risk to any investor is deflation, okay, and declining dollar. And we have seen the peak, and now we're going to see the decline in the dollar, led by these downgrades. It was too obvious, okay? And what does this mean for the stock market? Well, you got to understand, as you can see here, the valuation of U.S. stocks versus, okay, and this is a really interesting chart. Look at this is the yield curve inverted. Okay, the yield curve inverted versus the U.S. stock valuations. It's out of control. It is out of control. So my point is valuations are at ridiculous highs. Look, not for nothing. I don't care what the earnings say. Apple Computer is not worth $3 trillion. I'm sorry. I mean, they haven't had growth in iPhones. They have the first new product for Tim Cook's have been a disaster. Apple's vulnerable here. Okay, end of story. So the bottom line is that, the U.S. dollar has begun the decline, okay? And now this downgrade is going to accelerate it. And then you see here, okay, I've showed this before, crude is breaking out. It's up even more tonight, okay? And the bottom line with crude is this is going to have a huge impact on inflation. So here you have the Fed raise rates, indicate they're going to stop. But with the dollar decline and all these commodities going up, okay, and the stock market rocking and rolling, hey, inflation's going to stay high, and the Fed's going to raise again in September. Okay, this downgrade just basically baked in a 25 basis points move in September. Baked it in. Okay. August, as I mentioned to you, the last video is a really potential dangerous month. This just began. Okay, but despite what the banks tell you, the earnings season has been not good. I don't want to say disaster, but not good. There's a lot of financial engineering going on. A lot of these earnings are fake, but anyway, it's not good. Okay, again, I'm going to keep going back. And you compound this with the fact we have the Japanese situation, okay, with this downgrade. Japan's going to accelerate. That money in the U.S. Treasury is going to accelerate out, again, which will artificially, keep interest rates higher. They're going to sell bonds, bond prices go down, yields go up. So we got a serious problem here, folks. Mortgage rates going through the roof. They're not coming in anytime soon. In fact, I don't know if you've been paying, everyone pays attention to real estate. But if you saw what happened this week, okay, here we have rent market. Remember they told you, a couple of years ago, oh, rents are going to go up forever. Everyone's investing in rental properties. No one's going to, there's no one buying houses. You should rent. Well, rental market is collapsing. It's cracking. It's cracking, folks. Okay, there's too many apartments. They're building too many townhouses. They're building too many apartments. And single family homes are coming next. I don't care what these morons tell you. Okay. There's too much institutional inventory. They've been selling into the strength, but there's no liquidity. There's absolutely no liquidity. So, all the signs are there. Okay. Here we have, existing home sales. They continue to go lower. This is, obviously backward looking, but look at the trend, folks. So the real estate market is reeling. The US dollar is reeling. The stock market is about to take a plunge. There's nowhere to hide except for T-bills at 5%. There are money markets paying over 5%. If you're having money in the money markets, you're doing okay. If you're having money in T-bills, you're doing okay. Anything else, it's a disaster. Because the US, companies like Apple, they cannot operate in a vacuum. Okay, we know about China. China's got major economic problems. This is China's got huge problems. Okay, and look at Europe. Okay, Germany's economy has fallen off. Germany is in recession, confirmed recession, and that's the largest economy in Europe. The second largest economy is France, and here we look at France. PMIs. I mean, these are. The U.S. cannot continue to move in a positive direction. Okay, it's impossible for these economists to tell you the U.S. is doing better with Europe tanking, China, big problems. You've got U.S. economic situation. Like I said before, it's like a shiny apple with rotten in the inside. And here we see the beginning of the crack with this downgrade. So I hate to tell you I told you so again, but I did tell you so. It happened. It's going to look. I think Moody's is next. They have no choice. So if you're an investor, you better be careful out there.